Hello, everyone. Today, we will be learning about manufacturing accounts. But before we go into the question, I just want to show you the format of the manufacturing account. So this is what it looks like. You will have schedule of cost of goods manufactured or manufacturing account as the heading of the account. And then you will have on the items that you should have, you will have opening stock of raw materials, which will be under the first $sign, as you can see. Then add purchases of raw materials. Next, add carriage inwards on raw materials. So you're going to add this figure here to purchases. The third step or fourth step is to less return outwards of raw materials. Again, it's under this first $sign. Cost of raw materials available for use. So after you would have done the mathematical calculations here, that is the addition and the subtraction, then the total amount of money that you get will be the cost of raw materials available for use. Notice the underline here. Zoom up a bit. Do you notice the underline? So this is the number for opening stock, purchases of raw materials, carried inwards, return outwards, and notice the line, it's underlined. So the amount will be underlined here, and then the total for all of these figure items here or transactions there would be cost of raw materials available for use. Next thing you're going to do is to less closing stock of raw materials. So you're going to subtract this figure from the cost of raw materials available for use. The answer that you get will be the cost of raw materials used or direct materials. So it's either called cost of raw material used or direct materials. And you're going to put that figure, that number, in the second column. Next, you will have direct labor. Now, all of these, where you will get these information from, or these transactions from, is the list of information that is provided in the question itself. Let's continue with the format though. We scroll down. So direct labor is where we're at, and we're going to put that amount under the second column or in the second column. Next, we have direct expenses. That number also goes in the second column below the direct labor. Now, when you had or find the total of those two figures, the direct labor plus direct expenses, you will get the total that you get, you put it in the second column, and that new total will be called prime cost. I hope I'm not going too fast. The next thing you have is add factory overheads, and this is underlined because it's an heading. Notice the colon? Good. So all of this, everything that comes under the factory overheads will be in the first column. According to the format, factory overhead, you're going to add all of these. Notice it said add factory overheads. So when you find the total of all these factory overheads, you're then going to put the answer in the second column here. So all these figures here, the answer will go in the second column here, and it will be called total factory overheads. So the factory overheads includes supervisor's salary, factory rent or the rent that you pay for the factory, the insurance that you pay for the factory utilities, which is light, water, and other things, and then depreciation on machinery. All of that, again, you find the sum of that and put it in the second column, and it becomes total factory overheads. Scrolling down, next we have the cost of production. So we're going to write the cost of production in the second column. What we're going to add to the cost of production is the opening stock of work in progress. I'm going to put that in the second second column below the cost of production. Next, we're going to add the opening stock of work in progress plus the cost of production, and the total amount we get, we'll put it below this line here in the same second column, and it will now be called cost of processing for this period. Next step we're going to take is that we're going to subtract the closing stock of work in progress. So you're adding the opening stock of work in progress plus the cost of production, and that will tell you what the cost of processing for this period is. You're going to now go and subtract the closing stock of work in progress from the cost of processing for this period. This is it. The amount that you get will be called cost of completed goods. In bracket, the narration says to be transferred to the income statement. This should be the end of the manufacturing account. So now, again, this is the format. So now, let us move on to a question. The question that we have says 3C Limited. I'm going to say 3C because I don't want to say CCCC. So 3C Limited makes ornaments which sells in wooden cases. The following information is made available to you in respect of the year ended 31st December 2007. So all the information that we're going to put here on the format of the manufacturing account comes from this question. 1 January 2007 mean raw materials, wooden cases, and work in progress in January or on the 1st of January. This second topic here is the 31st of December. It means all the raw materials, wooden cases, and work in progress at the ending of December, at the 31st of December. And it gives you the numbers, the figures. Scrolling down, this is the question still. The question continues by saying the activities for the year ended the 31st of December were raw materials purchased. That means, for example, let's say you are a shoemaker or a shoe manufacturer. You have to purchase from your supplier or buy from your supplier the raw materials that you need to manufacture or to make those shoes, to put them in stores for consumers to purchase. So raw materials purchased during the year amounted to $8,800. Purchases of wooden cases amounted to $2,250. Carriage outwards, $210. And the list goes on with a bag of other expenses. Of course, you have to pay the salesmen their salary, and that totaled $5,950. The question continues by saying, the firm completely finished the manufacture of 1,000 ornaments. All ornaments were sold immediately on completion for $80 each. In addition, factory plant was valued at $100,000 on 1st of January 2007. It depreciates by 20% for 2007. That means the value goes down. The value is reduced. The second additional information is 80% of the wages are for productive workers and 20% for a factory overheads. 50% of the lighting is for the factory. And they tell you what you are required to do. A, draw up a manufacturing account to disclose cost of raw materials used, cost of wooden cases used, prime cost, factory overheads, cost of production. Let me scroll up to the manufacturing account format. They're asking you for the raw materials available for use, the prime cost, total factory overheads, and the cost of production. And let me scroll back down. So see, V, cost of production. So that's what they are asking you to find. The next thing they said is to draft the trading and profit and loss account for the year ended the 31st of December. C, ascertain the production cost of each boxed ornament. D, calculate the gross profit on each boxed ornament. The first thing that we're going to do is find the solution of 3C, limited manufacturing account. Good. So this is our heading. Notice I have solutions here. And this is our heading. Always write your heading. We have our $2 sign as is shown on the format for the manufacturing account. Now, we would list all of these items here, and then we will try to figure out what the amount is by looking in the question. The first thing we have written down is stock of raw material at the 1st of January 2007. When you scroll up to the question, you will see January 1, 2007, raw materials. See? All you have to do is lift up the information from out of the question and put it on the manufacturing account. That amount is $4,500. Let me just get my charger. All right, now we're good. So you will just search for the information. It's kind of like a scavenger hunt. So you just search for the information according to the list of items on the format for the manufacturing account. The next thing we have is purchases. What did it say we're to do to purchases? It says we're to add purchases. So we always had carriage inwards to purchases. Good. Noticed that the purchases is not added to the stock of raw materials in the first column. You notice that the amount for the stock of raw material is in the second column. However, because you have to add carriage inwards to the purchases first, before you can then add it to the stock of raw material. So the reason why you had carriage inwards as well is that when you buy, let's say you would have purchased the wooden cases, 20 wooden cases, you would need to pay for transportation to deliver your goods to you, to your business. So you're going to pay for carriage inwards. Good? So if we look back in the question, too fast. It says purchases of wooden cases. It also says carriage inwards on raw materials, and it gives you the figure. It says per. All right, so let me go ahead and screen share. Share. Good. So let's continue then. All right, so we're now to add our purchases, which is 2,000 $250. That's where we're at. Yes. No. Our purchases is $8,800 rather. Our carriage inwards is $390. We got it from here. Carriage inwards on raw materials, $390. And our purchases of raw materials we got from here, $8,800. So now we're going to go down in the solutions and we're going to use our calculator and find the total of $8,800 plus $390. And you should get $9,190. Now, because we were told here to add the purchases and carriage inwards to the stock of raw material that we had on the 1st of January, we're going to go ahead and do the addition now. So $9,190 plus $4,500 will give us $13,690. Good? Let's move on. The next thing we're going to do, according to the format of the manufacturing account, is that we're going to less stock of raw materials. Less means to subtract. So they're asking us to take away the stock of raw materials that we had left on the 12th of December. Just now, we worked with the 1st of January. Now we're going to the ending of the year, which is the 31st of December, 2007. And we're going to subtract that stock of raw materials. Good? How do we know what the stock of raw material is? On December 31st, where did we get this $5,800? Let's go back up in the question slowly. And there we have it. Notice it says raw materials here. And at the 31st of December, it says $5,800. So that's how we got the $5,800 that we put into the question right here. And they said we are to subtract it from everything up here. So we're going to subtract the $5,800 from the $13,690. We're left with $7,890. And that amount, this figure here, will be called cost of raw materials used. Now, let us take our little time to scroll back up to the question. They told us to create the manufacturing account and to find the cost of raw materials used. That's the first thing that we just did. The next step they told us to find is the cost of wooden cases used, then the prime cost, and then factory overheads, then cost of production. So let's now go to see if we can find the cost of wooden cases used during the year. Scrolling back down to the solutions. So here we have the cost, the stock of cases on the 1st of January 2007. That's $2,250. So I'm scrolling back up to the question, and here we see it. Back up, oopsie. Wooden cases, $2,250, 1st of January. When they ask for the wooden cases for the 31st of December, you're just going to look in the second column here and you're going to see $1,920. So let's scroll back down to the solutions. So this is how we got our $2,250. And they said to add purchases to that. We also had a purchase of $2,250. When you add those two together, you will get $4,500. This is it. Now, remember I was telling you about when they asked for the stock of cases at the 31st of December just now? This is it, $1,920. Now they said to less the stock of cases at the ending of the month, the year. So we're going to subtract that $1,920 from $4,500. When you use your calculator to do that, you should get $2,580. That's this right here. Good. Now, The next thing we're going to do, because they said we should find the cost of wooden cases used, so that's what's gonna be our next item. So, in other words, after we did our calculations here, that's how we would have arrived at the cost of wooden cases used, which is $2,580. Scroll back up, cost of wooden cases used. See? In the question, it says required cost of wooden cases used. We already found the cost of raw materials, so this is the second thing, right? The third thing that we now will have to find is the prime cost. So let me scroll back down to the solutions. Here we have our prime cost, but how did we get it? All right, so our prime cost is equal to the cost of raw materials used plus all the items here. So we're going to add wages to the wages plus the cost of wooden cases used plus the stock at the ending of December plus the purchases and the stock cases at the 1st of January 2007. So all this right here is what we added, or we totaled to get the prime cost. So we put together 2,250 times 2 equals $4,500. And we subtracted $1,920 from the $4,500, and we were left with $2,580. Now we're going to add this figure to this amount here. Also, since we're including our wages, $22,500 times a half. So you put that into your calculator rather. $22,500 times a half. How much do you get? So your answer should be $18,000. Let's see where we got this $22,500 though. If you scroll back up to the question in the first place, here we see the activities for the year ended the 31st of December 2007, and they were wages, $22,500. So that is all. We got the $22,500. Good? So now we are going to scroll back down. We're gonna scroll back down to the solutions. Right. And our prime cost is $28,470. This is the third thing that they told us to find. The fourth thing they told us to find is factory overhead expenses. Now, all of these are expenses: indirect wages, manager's salary, power rates, lighting, depreciation. And where we got all these figures from, again, it's in the question. See, lighting, $600, admin expenses, $2,400, factory rates, $910, factory power, $1,820, salary of factory manager, $1,650. So that's where we got all that figure from here. And we're just going to find the total of all of this. Our new figure is $29,180 after doing the calculations for these. Now, when you would have completed this figure, you are going to total it. So you're going to add the factory overhead to the prime cost, right? Prime cost plus factory overhead equals work in progress. Let's see. Prime cost plus factory overhead expenses. This is that plus these. Adding $28,470 to $29,180 will give us $57,650. Now again, scrolling back up to the question. See, the third thing they ask us to find is prime cost. The fourth, we already found that, which was the 28,000 something dollars. And then they said find the factory overheads, which is what we just did. The final thing that we have to find in A is the cost of production. So let me scroll back down again to find the cost of production together. All right. So they said the format of the manufacturing account says to had work in progress at the 1st of January 2007. That amount was $1,250, and we're going to add it to the factory, the total of the factory overheads. And we will get $58,900. From the work in progress figure, we're going at the first of the year, we're going to subtract the work in progress figure at the ending of the year. So December 31, 2007, it's $1,900. How did we get the 1,900? Let's scroll back up to the question. I have to scroll slower. Here it is. Work in progress at the ending of December was $1,900. So that's how we got this $1,900 here. Good. We're going to subtract it from this figure here, which is $58,900 minus $1,900. And we will get $57,000. Therefore, production cost of goods completed is $57,000. Now, scroll back up to the question. See, A. That's the last thing they asked us to find in A on the manufacturing account. The second thing they told us to do, B, is to draft the trading and profit and loss account for the year ended the 31st of December 2007. And in that trading and profit and loss account, they said we should find the profits, production cost for each boxed ornament, as well as the gross profit on each boxed ornament sold. So let us scroll down to the solution. I wrote solution part B here. So this is our, oh, this should be 3C. So 3C Limited, trading profit and loss account for the year ended 31st December 2006. Notice I always put my headings. We have our $2 signs, and the format of the trading profit and loss account that you would have learned about in grade 10 is as follows. So sales less production cost of goods sold equals gross profit less expenses, and all these expenses are the ones that we find in the question, and then we will get to our net profit. So sales is 80 times 1,000, which gives you $80,000. Again, production cost of goods sold brought down is $57,000. How did we get this $80,000 for sales? Scroll back up to the question. I should take my time. Ooh. Sales. So at the ending of December 2007, on the 31st of December 2007, the sales that they have for the entire year from January to December would be $80,000. Remember this additional information that they gave us? They said the firm finished the manufacture of 1,000 ornaments, and all of them were sold for $80 each. So that's why we multiply 80 times $100 under sales. Here, right here in the trading profit and loss account. See? So we got $80,000. How did we get this $57,000 for production cost of goods sold? Scrolling back up. Here it is. Production cost of goods completed, $57,000. and we have carried down. When you come in the trading profit and loss account, notice we have brought down. So we brought down this $57,000 from the manufacturing account. Now it says that we are to less production cost of goods sold. In other words, sales might take away production cost of goods sold, which will be $80,000 minus $57,000 equals $23,000. This $23,000 is our gross profit. That's our gross profit. Now, the format goes on to say that we should less or subtract the expenses. All the expenses that we have here are the ones that are provided in the question for us. The administrative expenses amounted to $2,400. The salesman salaries, $5,950. Lighting, 600 times a half will give us $300. In other words, half of $600 equals $300. Then carriage outwards was $210. When you add or find the total of these figures here, you will get $8,860, which you put right beside in the same line as the expenses. That is what you're going to subtract from the $23,000. So what they're saying is gross profit take away expenses equals net profit. See? Gross profit, which is $23,000, less expenses, which is all of these figures here, gives you net profit. $23,000 minus $8,860 equals $14,140. And that is the final figure for the trading and profit and loss account. It answers all of the questions that they said we should answer in B, C, and D. Good? So scrolling back down, $57,000 divided by $1,000 is equal to $57 each. That's for C. And let me scroll back up a little bit. C had asked us, let me copy C and D. So C, copy. Scroll back down to the trading and profit and loss account. I'm going to put this figure here. Not the figure, I'm sorry, the word. So A, oops. Control X. So A says to ascertain the production cost, not A, C rather, says to ascertain the production cost of each boxed ornament. So that's what we're doing. This is the answer for C, right? This ANSWER. That's the answer for C. $57,000, which is this figure here, which is a production cost of goods sold, $57,000 divided by $1,000. Remember we made, sorry, not divided by $1,000, just 1,000. So 1,000 is for the ornaments. So let me remove this comma from here. So we're multiplying 57 times 1,000 or 1,000, and we are left with $57 each. So we sold them for $57 each. That's the cost of production for each boxed ornament. D, this should be D. So D says to calculate the gross profit on each boxed ornament sold. Good? This is the answer. So I can just remove the E and write answer as well. just the same way that I did for the first one here for C. So D says to calculate the gross profit of each box to ornament sold. What we did was to say 23,000, which is this figure here. The $23,000, which is the gross profit. So $23,000 divided by 1,000 equals $23 each. And that is D. So this is the ending of the problem, the ending of the question. All right, I hope that you would have learned something today.